Hey guys, welcome back to another episode. Today I want to do kind of a cybersecurity update. This week we've had three big players, Okta, Crowdstrike, and Sentinelone, all report earnings, and they all kind of saw a nice increase after their earnings report. So in today's episode, what I want to do is just take a closer update on what they shared during the overall earnings, and also just show my overall thoughts on what company would I buy at these levels. Let's take a closer look in today's episode. All right, so let's just take a closer look at price action. Today, Okta is up roughly 2.7%, sitting at a market cap of roughly 13.9 billion. Year to date, the stock is up roughly 23%, and we see this huge bump up after the company reported earnings. Now, the second company, like I mentioned, we're going to take a closer look at is CrowdStrike, right now sitting at $160, market cap of roughly 38 billion, and year to date this one has done a little bit better, up roughly 55.8%, and we also see a nice growth after their earnings. The final one is probably the smallest player, and this is Sentinelone, up roughly 4% today. The company did report earnings yesterday, I believe. Market cap of roughly $4.9 billion. Year to date, the stock is up roughly 18.6%. So we definitely see companies in different industries within the cybersecurity market, but also within different market size. We have one that's 4 billion, one that's 13, and one that's 38. So like I mentioned, on today's episode, what I really want to do is just take a closer look at their overall earnings results. And let's start off with Okta, right? This will probably be the first one I have here. And Okta, we can see company reported adjusted earnings per share of 31 cents, which beat expectations. Revenue of 556 million, which also beat analyst expectations. And I want to say this is going to be the case for most of these cybersecurity companies. And I want to say it's probably because earlier on we did see some of the weakness from maybe some of the legacy players, where maybe some of these markets expectations weren't as high because of those legacy players. So we can see total revenue 556 million, up 23% year over year. Subscription revenue was 542 million, up 24% year over year. Their RPO, or kind of their subscription backlog, is roughly 3.03 billion, an increase of 8% year over year. And their current RPO, which is subscription backlog expected to be recognized over the next 12 months, was 1.77 billion, up 18%. So we see some nice growth. The company, unfortunately, is still GAAP operating loss. That loss was 162 million, which was roughly 29% of total revenue. They did mention that, for example, a year ago, their GAAP operating loss was 208 million, and that represented 46% of total revenue. So we can see the overall growth or the improvements that they are making. Now, if we take a closer look at non-GAAP operating income, it was actually 11% of total revenue, so that was profitable. Some other great kind of financials that we saw is net cash flow provided from operations was 53 million, or 10% of total revenue, versus 19 million a year ago, right? And we also see a nice positive free cash flow of 49 million, or 9% of total revenue. Cash and cash equivalents were $2.11 billion, and the company did also give us a nice financial outlook. So for the financial outlook for third quarter, they see total revenue to be up 16% year over year, and current RPO to be up 13% year over year. For the full year, they did give growth rate of roughly 19% year over year, and non-GAAP free cash flow of 15%. We do see that this company has a nice amount of cash. We mentioned, right, roughly 2 billion. They do have convertible senior notes of roughly 1.5 billion. So overall, the company is positive in free cash flow, and they do have a healthy balance sheet. Cash flow from operating activities, though, even though it is positive, a good portion or a good reason is because of that stock-based compensation. They have roughly 351 million in the last 6 months of stock-based compensation. So right now, Okta looks pretty interesting. I mean, they definitely kind of beat in those overall numbers. Now I want to take a closer look at their earnings call transcript and kind of showcase some of the things that I found pretty interesting. First, they mentioned that they had an exciting new win this quarter with one of the largest shipping and transportation lines in Europe. They also mentioned that a global 100 consumer package goods company was an exciting new Okta customer identity cloud winner. They do mention another thing that, hey, look, not only are we getting new customers, but we're also upselling. They mentioned Ryder lighter truck rentals was an exciting upsell that they've been using Okta Workforce Identity, Okta Customer Identity, and now they're pushing into Okta Identity Governance. OIG is what they call this one. They also added 350 new customers in the quarter, bringing their total customer base to over 18,400, representing growth of 12%. New customer growth, they do mention, is an area that they believe is being impacted by macroeconomic environments right now. And this is something we are hearing from a lot of cybersecurity companies. Outside of that, they did mention that they added 125 customers with 100 plus annual contract value. They do mention that now their total base of 100 plus ACV now stands at over 4,200 and grew 19%. They also mentioned that similar to last quarter, their fastest growing cohort is with customers that have over 1 million of annual contract value, and they had a record number of 5 million plus total contract value deals this quarter alone. Now, just taking a closer look at some other product innovations, they mentioned that they continue to be enthusiastic about the early adoption and momentum of Okta Identity Governance, which is what they call OIG. They do mention that nearly half of the OIG business booked in quarter two came from customers that hadn't previously purchased Okta Lifecycle Management or Workflows, which were the building blocks of OIG. So you can see a nice amount of growth in new customers here. And they continue to see significant spend uplift with customers buying OIG, as it's typically 1/3 or more of their total workforce identity cloud spend. So they're definitely seeing a good traction of OIG. They also continue to look forward to the launch of their Okta Privilege Access or OPA later this year. Since their update in quarter one earnings call, OPA has moved from beta into early access now. And then they're also working on Okta Device Access, which is another product in early access that they are excited about. So overall, we can see the innovations of their product line, and they're seeing good tractions in the ones that are out right now. They do mention macro headwinds, including minor FX or foreign exchange headwinds to revenue, continue to impact their business, but they believe that the environment is stabilizing in quarter two. They also mentioned that pipeline build was also healthy, but new pipeline continues to be skewed towards upsell. So I do believe that's kind of interesting right now. They did mention that, hey, new customers are kind of being impacted by the macro environment, but they are seeing an upsell on their customers. We kind of saw one with Riker Truck Rentals. So overall, I do believe Okta did have a nice quarter, and we did see kind of that earnings pop. Now let's take a closer look at the next company, and that's going to be Crowdstrike. But before we take a closer look at Crowdstrike, I just want to say thank you for the support. If you guys haven't, make sure to hit the subscribe button. We just hit 27.7. I'm trying to hit 30,000 by the end of the year. I know this is a cybersecurity company, but I mainly focused on the semiconductor market. I do have a semiconductor membership where I talk through weekly exclusive videos. Click join to learn more. Check out fool.com/Jose for a special offer. If you want a free newsletter, josenaharo.substack.com. If you want a nice website for semiconductor news, check out semiconductorwatch.com. And finally,
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so now we're going to take a closer look at Crowdstrike. And I do want to say I own two out of these three companies, Okta and Crowdstrike. We can see earnings per share were 74 cents. It did beat analyst expectations. Revenue was 731 million, which also beat analyst expectations. Total revenue was up 37% year over year. Subscription revenue was up 36% year over year. And their annual recurring revenue was up 37% year over year, with which is now kind of getting to $2.9 billion, or exceeding 2.9 actually. 196 million was net new ARR added this quarter. The company is also GAAP net income profitable. And this is, I believe, the second quarter sequentially that they have achieved GAAP profitability. We are going to see that GAAP profitability is mainly coming from interest, but it's still nonetheless pretty interesting. Net cash flow generated from operations was 245 million. Free cash flow was 188 million. And this company has a nice amount of cash in their bank with roughly $3.1 billion. Some interesting news, right? CrowdStrike likes to showcase a lot in awards, and this company almost on a quarterly basis gets new awards, so kind of just shows the leadership of their products. They also unveiled the new Falcon Cloud Security innovation, including one-click XDR to automatically identify and secure unmanaged cloud assets. Outside of that, they also talked about their adoption rates increased to 63%, 41%, and 24% for 5 or more, 6 or more, and 7 or more modules, respectively. So I think that's pretty good. The company did give us a nice total revenue guidance for quarter three, 775 million on the low end. Remember, this quarter was 731, so we're seeing that sequential growth. Like I mentioned, this company is gap profitable now, but a good reason is because of that interest income. They had roughly 36 million this quarter in interest income. If that wasn't the case, the company wouldn't be gap profitable, but still nonetheless pretty impressive. Remember, the company had roughly $3 billion in cash. They have roughly $700 million in total long-term debt. So financially pretty interesting. Stock-based compensation for the past 6 months was 295 million. Even if you add that back up to or subtract that from cash flow from operations in the past 6 months, the company is still positive in cash flow from operations, which I'm super, super excited about. Now I want to take a closer look at some of their notes that they had during the earnings call. I highlighted a lot of information here. I hope you guys are enjoying the episode so far. So they do mention that they saw an over 80% year-over-year increase in deals involving 8 or more Falcon platform modules. I think that's pretty impressive. They also mentioned that utilization of AI within their platform and across their entire organization is driving leverage in their financial results, even as they aggressively invest in fueling growth. They are raising their revenue outlook for the year, which again continues to show the strength of CrowdStrike. They are heading into the second half of the year. They see an increased momentum in the business driven by record levels of new logo and upsell pipelines. They're also observing substantial changes in the competitive landscape, uniquely benefiting CrowdStrike. So overall, I do want to say CrowdStrike is killing it right now. This is one that I really enjoy, and out of the three, this is probably my favorite. They did mention with the business momentum, they see competitive market dynamics. They believe their second half performance will yield double-digit net new ARR growth. And what's the main reason is the market was littered with dozens of companies, and that's quickly consolidating to several vendors. Smaller, narrow point product companies are being left behind. So overall, we can see the strength of CrowdStrike right now. One thing that I also do enjoy about CrowdStrike is they also kind of always throw jabs to the giants. For example, a lot of people say, hey, look, Microsoft has their own security platform. And they do mention that first is a major auto manufacturer that tried but failed to consolidate their security on Microsoft E5. The company's security team quickly realized Microsoft's complexity, multiple console, and lack of integration, missed detections, and complex deployment hampered their abilities to defend themselves and consolidate. This customer is now consolidating on Falcon platform with Falcon Complete for endpoint identity and cloud. And that's the thing, CrowdStrike mentions that, hey, look, we are the leader here in having a complete consolidation platform. The company mentions by moving from expensive Microsoft E5 to CrowdStrike, the organizations can save 50+% per user per year on Microsoft licensing costs. They also kind of talked about their momentum in some of their new products, and one of those new products is cloud. The other is identity. They do mention that ending ARR for Falcon modules deployed in public cloud grew to 296 million, up 70% year over year, larger than almost every single vendor in the cloud security today. They also mentioned about identity protection also stands out with over 200 million in ending ARR, up 194% year over year. So they are seeing good traction here. I am super excited about CrowdStrike, and we definitely see that this is one of the biggest outperformers compared to the O3. Now, the final company I want to take a closer look at is Sentinelone. And I do want to say Sentinelone is probably in a different league. This is closer to the starting line to some extent compared to the other two players that we saw out here. We're going to see this one's still not positive, free cash flow positive or cash flow from operations. They just kind of hit their target of gross margin. So we can see a little bit in early innings, and I do believe that's why valuation in a bit respects that. So right now we can see they do mention that their gross margin reached a new record. They achieved their eighth consecutive quarter of more than 25 percentage points of year-over-year operating margin improvement and improved cash flow margins by 55% percentage points year over year. So if we take a closer look, we can see total revenue is up 46%. I do believe this was up the largest, but again, it is the smallest company. Annual recurring revenue was up 47%. Total customer count grew 30% to over 11,000. They also mentioned operating margins was 67%. Non-GAAP operating margins was a loss of 22% compared to a loss of 57% a year ago. Free cash flow margin was a loss of 10% versus a loss of 65% a year ago. The company has roughly $1.1 billion in cash and cash equivalents. They did kind of give us a nice outlook for quarter three, 156 million, reflecting 35% year-over-year growth. For the full year, 605, reflecting over a 43% year-over-year growth. They did mention that they expect global economic conditions and the broader demand environment to remain consistent with the trends they could discuss last quarter as enterprises continue to right-size their security investments based on near-term budget constraints. Pretty much what we're hearing all around the map. At the same time, cybersecurity remains top IT priority, driven by an intensified threat landscape. Kind of pushing on, they kind of show us that annual recurring revenue growth continue to grow on a quarterly basis. Same with that overall revenue. They do mention net retention rate. It has been impacted right now, but it's still sitting at 115%. There's two main things affecting net retention rate. First is they do have an acquisition of Ativo, which is some legacy products, and that's obviously impacting. The second thing is just the macroeconomic right now, the constraints from the budgets, but they do see that in long term, there is potential based on high customer retention rates. Kind of seeing with huge customers, ARR customers with over $100,000 is up 37% year over year. And we also see total customer counts up 30% year over year. They did mention that they secured several leverage wins, including U.S. federal agencies and global healthcare companies. Now, the final thing I want to mention is the level of margins improvements delivered. They do mention, right, they're improving really good. They do have a nice amount of cash flow, and they are confident in achieving positive free cash flow in the second half of next fiscal year. So this, again, is a company that's improving compared to the other ones. This is a lot closer to the starting line. Now, the final thing I want to take a closer look at is valuation. If we take a closer look at price to sales ratio, CrowdStrike is the highest, but in my opinion, is the one killing it the most. Sentinelone is in middle with roughly 8, and Okta is roughly at 6.3 at the moment. If we take a closer look at forward 1 year, it's pretty much the same, where CrowdStrike dominates. Sentinelone is in the middle, followed by Okta. I want to say they obviously are trading a little bit rich to some extent on price to sales ratio. Obviously, if we look at ARR, all of these are a little bit lower. If I was to add to a position right now, I would say CrowdStrike is my number one to add on to, followed by Okta, and then maybe Sentinelone. I do want to say the cybersecurity market is one that's continuing to evolve. So if one doesn't own any of these, maybe take a closer look at a cybersecurity ETF. That's definitely a great way. I do believe the cybersecurity market will be one that will beat the overall market within the next few years. So definitely take a closer look. I hope you guys enjoyed this kind of very deep dive on each of these three players and their earnings. If you guys haven't, make sure to hit the thumbs up and take care, and see you next time.